on the far right are the issuers. In the middle, the investment banks, and to my immediate right, the investors. So we're here to debate the green and social bond markets. And as before, of course, we very much want you, the audience, to join in this debate. So please stick your hands up. I'm afraid I've been locked out of the app, so putting in questions via the app won't work, so it's going to have to be old school. So to begin with, I'm just going to ask each of the panelists to introduce themselves, and then we'll get started. So, please.
Hello, everyone. My name is Rebecca Self, and I'm the CFO of Sustainable Finance at HSBC.
Hello, everybody. I'm Alessandro Canta, Head of Finance and Insurance at Enel. One single remark: I'm very comfortable to stay with the lady in the audience. A little bit uncomfortable to stay with my friend because I mean there is a difference of tone between investors and issuers. But I mean I'm very comfortable because we have the only lady nearby, and I have the highest people on the audience on the other side.
Thank you. Well, I'm sure you'll shine in between them, Alessandro.
If it becomes too uncomfortable, we can take Rebecca into the middle. So, good afternoon. My name is Otto Weihausen-Brinkmann. I'm head of funding at KfW, and beside of global benchmarks in US dollars, I'm also responsible for the issuing of green bonds.
Thank you. Investment banks.
Arnold Fowler of DZ Bank. I have a DCM background. I used to run DCM at DZ Bank until the beginning of the year, and I have now a more coordinating function within the capital markets division, including sustainability.
Jo Pessels, heading the Green, Social and Sustainability Bond side within ABN AMRO here in Amsterdam.
Ulf Hannesson, I am the CIO of the Glacier Impact Fund, a startup climate-focused hedge fund. Used to run credit books at AP4, one of the Swedish institutions, and have a background in investment banking as well.
Good afternoon, my name is Bram Bos. I work for NN Investment Partners, part of NN Group, one of the largest insurers in the Netherlands. I'm a lead portfolio manager for the NN Green Bond Fund, which is currently the largest open-ended green bond fund in the market, 600 million euro AUM. And well, I'm looking forward to this debate.
Thank you very much. Okay, so with the first question, I'm going to ask the issuers, first of all, to answer on this. Are investors vocal enough about what they want so that the sell side actually know how to serve them?
If you ask me when I go to the roadshowing with Bram, I would say yes, because it's very tough and very determined. For sure, when we issuer go to the roadshow, we select the most, let's say, sustainable investor. I would say that is easy in this phase. It's much more difficult for us immediately afterwards when there is the book building to identify who is sustainable, who is green, who is not, and so we don't know what they really want. There are investors nice to have, green nice to have, there are investors committed, and there are investors that you have some difficulties to identify.
Okay, thank you. Let me ask the investment banks on that point as well. Do you think there's, obviously you sit in the middle of a market where there's communication in both directions. Do you think the investors are clear enough about what they want?
Well, I would address that question rather the way that obviously we are facing a very similar situation as you just mentioned it. We get more and more questions from issuers. Okay, help us. Who should we allocate the bonds to? Are they dark green investors? Are they light green investors? Are they just picking it up because it feels good? And there we need to dig deeper and need to understand the various investors much better than we do right now. That is something our research tries to work out in cooperation with investors and with sales. And the other thing is very much from a German perspective that I think we do have about a number, maybe 20% of the investors which are very much ahead of the curve, which are driving the market, which know what they are talking about, and 80% of the investors still need a guiding hand how to approach the entire topic of sustainability and how to separate funds and things like that. So that's my view. I don't know whether you want to add to that.
Yeah, no, I think they're very flexible. I think it's a growing market with a lot of new categories, asset categories. So I think it's good to be open-minded and open for discussion, and I think that's definitely the case. On the other hand, also there are sometimes some structures which are pretty loosely put in the market. So I think a little bit more pushback on some elements could also be welcomed. Of course, there's some discussion in the press, but I think that could also be a little bit more vocal, and I think that will also grow the market to be more precise and specific.
Okay.
If I may also add there's quite a big geographic mix of investors who we talk to. And I notice very vocal investors here in continental Europe, but if I look to the US or to Asia, perhaps it's a little bit different there, the experience that we have, particularly with the mainstream. So I think in answering your question, it's a mix. And there are certainly those who are leading, who are very vocal, and then those who follow. And there are risks associated with that also.
Maybe I can also, give a little bit comment from the investor side. I mean, we try to be very clear on what we do in general. You know, when you meet us, particularly the issuers, we explain in the biggest detail what we do. Also how we allocate funds, which funds we manage. We have sustainable funds, we have a green bond fund, we have a normal fund. We also really distinguish in terms of how we put in orders, for example. So we are very open, very clear. And actually, I would push back the question to the issuers, because I think you can be more clear to investors in terms of, for example, how you allocate and differentiate between green investors, green bond funds, non-green bond funds, etc. Because this is quite often really very vague and very difficult for us also to make an assessment of how our allocation will be.
You're right, in the sense that it is quite easy, as I was saying before, and also has been confirmed by Rebecca, to allocate you or the investors, which we are 100% aware that have certain particular fund dedicated to us. And so this is the easy part of the game. And the allocation process, with the help of the bank, we have to protect and to better allocate. This is our own, need. Even because when we issue a green bond, at the end of the day, we want to also present to the financial community that there's been a green bond, not a bond bought by everybody. So we are very keen to present the famous percentage of green investors in our post-mortem, in our case study. So this is our priority. What I said and what has been confirmed, that, for example, when you go in the United States, yes, very interesting, this green bond, but what is the yield that you are paying? So it's much more interesting, the economic side. And as we gonna probably discuss, so far there is no any differentiation in terms of cost, by which this is another part of the discussion. But you're right. Probably we don't have still enough pure green investors by which we can issue a pure green bond. And so we have to comply with the fact that we have to complement your allocation with the allocation of other guys.
Ulf?
So maybe a little bit of a difficult question for the issuers here, but consider if I'm an investor and I'm running a fund which is non-green dedicated and isn't as pristine as you say, but that fund instead actually buys some of the new issue, HSBC 81 or NL hybrids, other parts of the capital structure, but we want to have allocation to green bonds as well because we think it's a great instrument for mainstream investors. Is it fair to say that you would misallocate those guys compared to those who do not bring those benefits to the rest of your capital structure? You have to say yes or no on that one.
Okay, Alessandro, yes or no? And then let's hear from Otto, because I want to know what he thinks.
No, we have to take care of our investor base globally, for sure. So I wouldn't say yes, but I mean, it is quite normal that everybody of us have to respect our own shareholders, investors, our different class of investors, for sure. But as I said, if you can, and what is our priority issuing a green bond, should have to be and have to be to allocate green investor.
I think with the new MiFID regulation, I think it's becoming more and more evident that investors need to be vocal as well to their book runners, to the issuer as well, that if they buy something, it's for a specific green reason or green fund, because with MiFID we need also to be very transparent in how you will give any specific allocation to certain green investors, certain groups. So I think that's also a big change in the market, and definitely something to take into consideration.
Okay, thank you.
And to add to that, what you brought up, Ulf, I mean, ultimately, your point is valid, yours is valid. It's all about communication, and you need to sort it out prior to opening books. What are your criteria in terms of allocating at the time when the book is oversubscribed? Then you don't have that conflict. Or you have it lower.
Thank you, John. So maybe from our side, yeah, I can mirror that to certain extent. If you are not issuing AT1, so you can only invest into KfW benchmark bonds or green bonds. I think we are quite clear at the beginning and what we are usually doing with an allocation. We have a funding program of 75 to 80 billion. So actually our prioritized investors are long-term investors who are supporting us consistently. In the field of green bonds, we have a slightly different allocation where we prefer green bond investors. And here actually it becomes where the challenge is. We had situations where we had a green bond which was really selling very good. The book was oversubscribed a couple of times, and suddenly actually trading orders or investors which I've never thought about that they are green claimed that they are green and sending me emails that they have now a green portfolio or could create a green portfolio. And that's a challenge we do have. During the transaction, there's only a small period of time where we can do the allocation. So for us, it's not enough time to go really into details. We have hundreds of investors into the books. And I think going forward, it would be very helpful to have a classification of the greenness of investors and what they are actually really doing. And maybe in addition to that, like asset managers, they have several kind of funds. They have green funds and they have traditional funds. So I would encourage if these kind of investors actually split their orders into a traditional fund and for their green funds, that we have more guidance in the allocation of the book.
To comment on that, because that is exactly what we have been doing since the beginning of this year. So we differentiate between our proprietary portfolios, normal funds, and green funds. So it's very clear how the allocations are. So that's just a comment from our side, something we've changed from the beginning of this year.
I think the situation could improve with the experience, because when you issue the first one, probably you don't have so much experience, but also with the help of the banks, because at the end of the day, are the sales force that speaks directly with the investors and they know them very well. So there shouldn't be any, I totally agree with him, even if it's too all respect of me, but it is something that it is very difficult for us at the early stage, with the help of the banks, that things are improving. I mean, according to our experience, from the first one to the second one, there has been a difference because also we got more information, but also it's very important to go road showing, to make information and to go visit the investors, to create our own idea of what is the quality, the green quality of each single investor.
Okay. Joop?
Yeah, one point, I think it's also a question, where do you want to go with this market? If you have this very thorough analysis from the green side, for the green fund you say it's eligible, it ticks all boxes, it's great stuff. You talk to your other fund and say, well, and maybe it's your regular fund, and you say, okay, this is such a good product, you should invest in it, and they do, because they also want to greenify their regular portfolio. I don't think you should discourage that to say, okay, well, you get a lousy allocation, because you might still buy it because it's green. So I think it would be also good to keep that in mind. If you want to grow the market, you should not exclude investors who want to improve their life but have a regular fund.
Okay, that's been very interesting. Does anyone in the audience it seems to me that this is a problem that is all sides actually kind of want a solution to. Everyone's finding it a bit difficult, but nobody really has any answers. There are sort of quite difficult, it's quite difficult to solve. Does anyone in the audience feel they have the answer or a potential answer to this? Yes, madam.
Green investors should have the poor issuer pay a little bit. If the price is better for the issuer when it's green, then you have naturally these two allocations.
Okay, thank you. Well, Florence.
And social too. Green and social.
Yeah, this is Florence Saliba from Danone, who has asked this question, and she's jumping ahead a bit on the agenda because that was definitely there. But I think it's a good moment, we might as well go to that. This question of pricing, we all know this is a regular point of argument in the green and social bond market. Should the issuer receive better pricing when it issues a green or social bond than a normal bond? Okay, so who'd like to take up the challenge? Ulf, you're...
Well, I think a general comment on green bond market, the allocations and the pricing and so on, these are bond markets. It's not this new thing that we've invented with the green bonds. It's always been there. There's always been investors whining about poor allocations, banks taking their share in between, and then issuers saying that they didn't get the right traction with investors, et cetera, et cetera. So that's nothing new. And that comes back to the pricing dimension. It's supply and demand. It needs to be decided there to try to set some sort of firm value. This is where it should be or should not be. Myself, when I invest in a primary market in a green bond, I try to estimate what the demand function is, except what I'm having, compared to what the demand is for the other bonds in that curve. Maybe there's an excess demand, and that motivates a tighter pricing, lower pricing than it would have been otherwise. Well, okay, so maybe it, but it's also interesting to see where is that bond going afterwards. What's the P&L you can attract on it in the aftermarket and so on. And it's not that super special case. Now we have a situation where there is a very big demand for green bonds, and I think that to some extent is reflected in terms of more better pricing in terms of the market and being able to bring deals to the market. I think it was an Italian utility brought a green bond in early June. They wouldn't have been able to bring that unless it were a green bond, for example. So it's a matter of access as well.
Yeah, I think that we're going to arrive there. There's a path. There will be a differentiation. So those guys in the long run will make a flight to quality. And so will give certain premium to the real issuers, the real green issuer, sustainable issuer. It's a question of time. The immediate effect that we already have received already, I shouldn't have to say that, but it's real, is that a green bond is better allocated and is much more stable than any other bond that we have issued before. Because those guys, for their own rules, for their own need, are the ones that are less inclined to to sell or in the secondary or in any case to change their position, I would say. So this is our evidence. And there are also some graphs, some study about it, that in the last 2-3 years, the performance of the green bond on the secondary market has been better than the normal one. And this is beneficial to the issuers in any case, because firm, in any case, part of your curve.
I want to just give one comment on that, because indeed there has been a lot of studies about, how green bonds are pricing versus the issuers curve, etc. But I think we should not focus too much on the pricing of the green bond itself. I think, it is in the end a senior unsecured, most times a senior unsecured claim on the company's balance sheet, not different than a normal bond. But I think you should really see this broad in terms of, what effect it has on the company as a whole. And I think that's really where you can see the benefit. And we've heard some anecdotal evidence. I was, for example, in Helsinki last week on the round table, and there was one issue we said, after I issued the green bond issued more or less in line with the normal curve, but my whole curve shifted down. And I think that's really where the issuers should eventually see the benefit. As a company, you're doing the right things. So let's not focus too much on the individual green bond where it's trading, but think about the broader impact it has on your company as a whole.
Thank you. I know. Let me just take Arnold and then Rebecca.
I hope I can speak for Joop as well, but I mean, from our perspective, I mean, we as intermediaries, we wouldn't care unless we slice out the fees we have agreed with the issuers, whether the green bond would price through the normal bond or not. But ultimately, I guess we need to also reflect where we come from or where we came from. And that's all been mirrored by both issuers and investors already. I mean, the secondary market performance of most of the green bonds, or all the green bonds, is much more stable than the normal curve effect, then spilling over effect on the normal curve, which you might observe. You have soft factors where the corporate identity is supported, and so on and so forth. And I would not exclude that at one point in time we might see pricing slightly through the normal curve, but it's a development that we don't observe pricings yet, which are through the normal curve, is also a matter of fact that then obviously there is still investors who would look for alternatives, and then where you are forced to price a bond where we offer them. That's simple demand and supply function, and everybody is saying there's not enough supply for the demand we are having, but ultimately the pricing dynamics in the market are telling us that yet this is not observed when it comes to the individual transactions.
Rebecca.
Yeah, just to echo some of the points, I think there's some evidence with some deals that in primary and secondary, they could price tighter due to a variety of reasons that we've mentioned already. But I do think it's really important not to lose sight of that overall company strategy point and the broader issuance. Because actually, if you're moving your strategy as a whole, then there's some arguments to say, actually, it should price in line. And I think that's the important piece, as well as the investor conversation and communication there.
Maybe one thing, what I see in the market when you speak with the potential issuers, now we've seen the first wave of issuers who are leading in this sustainability path, but there are many issuers who are interested but have difficulties internally to explain why they should issue a green bond while it only costs money and extra work. So if you really want to grow the market, I think it would be important to have some kind of benefit. And obviously we can try find other non-financial benefits, but it's an important factor. And the second point there is if you look at bank balance sheets, if there would be any pricing benefit in the green bond, you could pass it on to your clients and you could generate much more assets. And if you have more assets, you have more bonds. So I think not sure where it comes from, but I think it's an important element if you really want to grow the market.
Thank you.
So two short points. The number one being that the banks are really battling for league table when it comes to green bond issuance. So you can cut down on the fees that you pay to the banks right now. Slightly tongue-in-cheek. Number two, there is some pretty atrocious econometric analysis of this sort of green bond premium. The Bank of International Settlements has one which is particularly bad. So beware of some of the statistical analysis, which is with regards to where green bonds should price or not price relative to secondary market curve. As far as I've seen, and I have a fairly good training in this, the empirical evidence is not there just yet. So you just have to get it by feel more than any sort of quantitative science.
And also read GlobalCapital, because we cover every issue, and people are constantly telling us whether it was priced tightly or not. Okay, Rebecca, did you want to come back?
Can I make one more remark? Because I want to deviate a little bit from what we have been discussing here. You know, one big thing and one big problem in the green bond market is sector diversification. I mean, Joop, you just mentioned, you know, there are maybe some issuers in the market who still, you know, need this last push, you know, to issue a green bond. Industrials, the big polluting industries, chemicals, we have not seen them in the market yet. And I'm very much of the view that those specific sectors are the ones where we can gain a lot. You know, we need to push them. you know, to look at this market and potentially issue green bonds to change their business models. So my question is also a little bit to banks and, well, also the issuers, but there are no dirty issuers here in this panel. How can we get this done? I mean, we need issuers with positive success stories who potentially have issued green bonds, who moved the curve down because they issued green and had, you know, a good profile and a good story, to talk to the more dirty sectors and convince them that they should choose this route as well. So my question to you is, why don't you do this?
From the Z-Bank's perspective, obviously we are talking to those corporate issuers, but then again, most of them are either so infrequently tapping the market that the big question is, how much transaction cost does this mean to me? How much effort do I need to put into it? I rather follow a sustainable approach on the equity side, if it's a listed company, rather than breaking it down into the use of proceeds and those areas. A very difficult sector and dialogue there. It's not that we are not conducting that dialogue, but it's rather tricky to succeed there. We have some, as a typical German product, we have a growing number of Schuldschein issuers, smaller issues which you don't see on the Bloomberg pages, which are a bit more open to that sector. But it's definitely, to that extent, I agree to you, it's the sector which would help develop to see the market develop significantly. But it's tough to break them up. And the car manufacturers in Germany, they have their own problem these days.
Okay, I'm going to step in. I want to hear what Otto has to say. You may have another point you're about to make, but I just want to hear what you say about the pricing question, because I want to know what you think about that.
Oh, the pricing. Well, I couldn't agree more with Ulf, actually. It's about supply and demand. And we as an issuer, I as an issuer, we have the choice. If I have to pay up to traditional bonds, probably I would stop issuing green bonds. I'm more than happy to issuing green bonds flat to the traditional curve, what we actually do. And if they go through the traditional curve, I probably will issue even more green bonds. We had that as a beginning, and that maybe to your question, how to convince other issuers. We had a couple of discussions with other SSA issuers after we have started to issuing green bonds, and always the question came up, so, okay, what's in for me finally in terms of pricing? And I always responded, be careful with that. So issuing green bonds has a lot of advantages and merits. It actually enables us to have a more qualified discussion with investors and enables us to show investors what we are actually doing with green bonds, gives a lot of reputation, opens the market, develops the market. But in terms of pricing, actually, I also do see not much witness, or at least the advantage what we do see, and I have to admit we are an SSA issuer, we are pricing pretty tight anyway, are in an area which is actually not really measurable. So there's not really enough advantage for us, which we can use to pass through to any kind of our lending.
Did you want to speak, Rebecca?
Yeah, I was just going to give an example from green loans, which could provide some sort of read across, just an idea, and to Bram's point. So there are loans which typically are to industries where they're more carbon intensive and large companies, but they have a ratchet down in the margin if they meet certain sustainability goals. So for example, reducing greenhouse gas emissions year by year, or improving certain sustainability metrics or ESG rating improvements. And so as a issuer, I'm asking an investor if that's the sort of thing from a pricing point of view that could work in this market.
Bram, or Ulf, do you want to? Yeah.
Sometimes, some of these targets are just going to be open for debate, and it's going to be a legal wrangle. It's going to be hard-coded into a bond contract, and it's just going to require much more resources than the most institutional investors actually have. So complicating things might actually be detrimental to the market. When it comes to this sort of the carbon-intensive industries issuing green bonds, I'm all for it, but more on our viewpoint is that, you know, you have to exhibit that you have a Paris trajectory sort of compliant strategy before you do that. Otherwise, it's hard to call it a green bond. Someone else in another panel here earlier today uttered some sort of sense of urgency, actually, which, you know, coming back to the fact that we need to buck the CO2 curve by 2020, and we need to be pretty fast in reducing CO2 emissions after that. That sort of urgency is also something we need to see, and then we can't, you know, play around with some of the browner issues. And I think that actually goes, and I disagreed with Bram here a little bit earlier on when he said all the clean issuers and so on. I think it's always important for us as investors to ask a question, you know, what's the dirtiest thing that, you know, the issuer has on their balance sheet? I mean, I read up on HSBC sustainability policy, for example, where it clearly states that you will invest in new coal-fired power plants as long as they meet certain carbon emissions criteria, which for me is it's a pretty stunning statement, right? It's fairly circular, but anyhow.
It's not quite right
yeah.
either. So it's no new coal-fired power plants at all, with one time-bound exception, which is till 2020, and only for Indonesia, Bangladesh and Vietnam, if there are no alternatives.
Very good, then we clear that up. I mean, but something which is really important in terms of the point here, when you're an issuer and you're coming to this, you should be ready when you're having the green bond discussion to discuss the brownest part of your capital structure. It's like for myself as a bond trader, I know and I study the worst trades I have on, my worst positions. That's where I learn and that's where I improve. It's not always about all the things that you want to post on the website. And I think that's really something we want to get across when we meet the issuer side.
It sounds fantastic to me. So the best possible way to enhance this market would be to exit from the logic of the product, by which you have to evaluate the sustainability of my company itself. So we're going to go to you with all the balance sheet, with all the dirt party of our company, but at the end of the day, you're going to rank us to the extent that if I'm going to issue whatever, commercial paper, bond, loan, whatever, all the instrument will be ranked because the company is ranked sustainable at this side. And this should be probably something that we have to think about. And during some panel today or some discussion already came out, the fact that rating agencies are thinking to rank the company in terms of sustainability, the SG rating, everything is converging, not to present to them only a specific product. For sure, the green bond is painful, and probably, personally, we don't want them to pay for that, because there are also costs associated with that, because we had to report project by project, hire the second party opinion, hire the auditor for, at the end of the day, for making the check of what we have spent, and also internally, in order to have a better governance, we have also created a green bond committee, interfunctional, composed by 10 persons. So there is a lot of things, there are a lot of jobs associated with the green bond issues, but this is not the issue, because, for example, for some company like ours, it's quite normal, because we already invest a lot in sustainability, so those costs are already inside our nature, so we don't want anybody to pay for that, because we already sustain that. But would be an issue for the medium-sized company. They cannot afford to have all these costs associated with the new issuance. So, first of all, probably we should have to strengthen the market, allowing probably us, let's take the case of Enel, for example. Enel is present on the market, not forgetting the green label, because we have the strategy that speaks about sustainability, but because we have a lot of investment that are sustainable in its own. But I have also a lot of refinancing to do, coming from the acquisition of Endesa, which I have to, say, refinance it not on the green bond market because I'm not allowed. If the investors would consider that the acquisition of Endesa at that time has contributed to create a sustainable strategy for the company, I would be allowed to, say, enter in the market, not with the 1.5 billion a year, but with 10 billion a year, because I have the refinancing coming from the past.
Okay, so, Alessandro, I think
investors, what do they say about that?
I'll ask them in a minute, but before that, I want to be very clear what you're saying, and somebody's already clapping. Are you saying that you would like to move on, to sort of leave the green bond concept behind, and for companies to be assessed by investors on the basis of their global and all-inclusive ESG performance?
Yeah, I think that would be beneficial. I don't want to say abandon the green bond market, so
Yeah.
I'm not, or the social bond or the sustainable bond. Those are products that are, I mean, pioneer, and we have to continue to invest on that and to enhance this market. But probably a possible solution for improving this market, that today is 10% of the global market, is to try to give a label, so a rank of sustainability to a company. As I said before, yes, we should have to try to go beyond the product. In this way, we have 5 to 7 billion of refinancing to do coming from the past, that if our company is judged sustainable itself, I could present to the market rather than doing 1.5 billion a year.
Okay, thank you.
Maybe a short comment from my side. I'm really against another label. You know, I think we have to try to minimize the number of labels in the market. You know, we have a green bond, social bond, sustainability bond, SDG-linked bonds, water bonds. It's getting a little bit much, you know. So I'm really against another label. I think that's one important point. Second of all, you know, in terms of your issuer sustainability, I mean, it is something we already include in terms of our credit analysis. So we already take that in consideration. So I think for us, and I think most asset managers these days, they claim they integrate ESG. So, well, some do it more than others, but so that's something we already do. So not.
The problem is that afterwards I have to report project by project the money that you lend to me, that you give to me. And if I have to refinance, as I said before, something coming from the past, I don't have the evidence for doing that.
Well, the green bond here is sort of the ticket you pay to get into the party where you prove yourself as being sustainable and sort of Paris compliant. It's a badge, and you don't need to fill your whole refinancing book with green bonds, but having a couple of them where you can proves to us in terms of your dedication to the sustainability issues, or it goes part of the way to prove that at least.
As he said, we already do. And we know that you have your own valuation of the sustainability of a company when an issuers come to you to propose a green bond. The problem is that the underlying have to be either new project or old project to be refinanced that has certain impact in terms of avoiding CO2 emission. We know everybody what are the rules. So what I'm saying is that I'm fine with that. We are going to refinance also infrastructure and network. We are the biggest operator in the world for infrastructure and network, so we have plenty of investment. What I'm saying is that we are missing, not only at NL level, but on all the issuer level, probably a big chunk of things that comes from the past that in any case have to be devoted to the, let's say, normal market or the stable market. And this is not what we would like to do. Is probably a proposition if we want to let this market of sustainability more than green bond, sustainability finance to grow more than we are able to do, continuing to invest in the green bond, in the social bond, in all the other instruments.
I know Arnold wants to.
Yeah, I mean, isn't that discussion touching the intrinsic debate which we are anyhow having in the fixed income market? I mean, this initial point you made, Alessandro, is probably sounds to me like the way you're looking as an equity investor on a company. That's where we had the aspect of sustainability much longer than in the fixed income market. And only with the help of the debate on the use of proceeds, the project by project approach, we were kicking off this new market, which brings us here together again for so many years now. And without that look on the use of proceeds, maybe the fixed income market would not have developed in the direction of sustainability as it has done recently. So from our approach, from our experience, it's definitely so that most investors, at least, which have a sustainability approach, that's at least the view of the salespeople and the research people within the Z Bank, roughly a 50% weighing of the company view on the one hand side as a first matter of analysis. And if that's fulfilled, then you might look, particularly if you have a dark green dedicated fund, you look on the use of proceeds. So both work hand in hand ultimately. And I don't think that we will turn back the wheel to just taking a look only on the company level as you were lobbying a bit for. I don't think that will work, and that this will make the market grow as it has done recently.
I want to just, Arnold and Bram, you introduced arguments that I think speak to each other, but we haven't yet quite matched them up. Because Bram, you were saying that part of the good thing about, you want to see polluters basically coming to the market because that will sort of help them transition and become better. And Arnold's answer to that was partly, well, we do talk to them, but some of them say, oh no, it's a bit difficult, and we will just address it on the equity side, like i.e. as a whole company level. But isn't that sort of what you want? I mean, doesn't that show that they may bypass the green bond market, but they are actually going on their sustainability journey?
Yeah, I mean, good question. You know, what I can say about that is that you know, the argument which I've heard and which has been raised a couple of times is, you know, it is difficult, it takes a lot of effort to do that, etc., etc. I think those companies probably you can question whether or not they really want to change. And it's more a problem of those companies really moving ahead, being innovative and going into transition than, you know, I mean, I think that's more a little bit the issue here. A lot of, I think it's also something which you just raised, you know, in terms of cost and effort. You know, it's not a lot additional we have to do because we want to do it anyway. And I think that says it all. I mean, you know, as a company, if you want to move in a certain direction, you do it anyway.
It's exactly what I said. So there are some company for which it's much more natural because they already have investment committee that already give KPI for every single investment, already have some governance internally, already have a dedicated team for sustainability. So there are companies that are already set up for doing that. In fact, for our example, we are right to issue a green bond in 2017, not at the early beginning. Why? Because we set up everything before, and so, I mean, the step for us was a little bit more easy. I'm not saying that. I'm saying that for the other company, it's a question of transformation. They have to innovate, and they have first to make the step of changing the strategy, second, to align the company structure and the company governance to the sustainability, and only at the latest point they can issue a green bond or be part of this market. It cannot be done vice versa.
Okay.
Maybe also to add to your question, I think it's pretty difficult to get more the dirty companies to the market. Maybe for some practical reasons, like not having an investment grade rating. That is one of the more difficult points, although there are now other type of potential interests. But also the reputational risk. So where do you come from? Where do you have to end up before you can convert what we call a green bond? The whole discussion about greenwashing, is that beneficial for the company or should they do it in a different way? And I think that's there. We've seen now many other types of solutions with ESG improvement type of bonds. Because to call it green, you have to also have a certain minimum target level to reach, and I think that's more tricky especially for the so-called dirty companies.
But here I would like to put the question: how can that happen? I mean, the reputational risks. We have underwriters who should actually do a due diligence, and actually ultimately the answer could be you should rather not issue a green bond. We have second-party opinion providers who actually claim they give a certification. Actually, it should not happen. I think what we need here is a little bit more leadership and help these kind of companies to give them guidance. You should issue a green bond, it can help you, or you rather should not issue a green bond, could be a huge reputational risk.
I want to just be clear, Otto, are you saying you think there has been instances of reputational risk occurring and that these cases shouldn't have happened because the things should have been handled more carefully?
I think so, yeah. I think that's the responsibility of underwriters in the first step and also of second-party opinion providers.
Yeah, just to give one comment, and for my compliance department, I'm never allowed to talk about issues, but we all know the example of Repsol. You know, that is an example of the whole structure and the way it was brought to the market, which I think also banks really play a role here, you know. They should also advise the issuer to do things. And for example, one of the key things here is engagement with investors. You know, it's a crucial part of trying to figure out how to do it in a credible way. And it's a really important role there also for banks to minimize reputational risk for those companies. And maybe sometimes, you know, if it's just not credible, say to the issuer, okay, you know, maybe it's just better to issue a normal bond.
Maybe that's also an answer to your question then.
Just one moment, Bram, don't you, isn't Repsol exactly the kind of company you want to issue?
Absolutely, absolutely.
But you weren't happy with the way they did it?
No, I mean, I think, you know, just after the Asian agreement, there was a conference in Madrid, and I also was participating there. We had a lot of discussions about how they did it, and you know, I think one of the big problems was the whole structure around it. You know, the engagement, the type of projects were maybe not clearly defined. So I think a lot of these issues, they could have been avoided. And that's really a shame, because it was really the first big oil company who maybe, wasted the party a little bit for other oil companies, and they got scared by this maybe not best example.
Joop.
Yeah, no.
Well, I mean, definitely it's a job of us intermediaries to have a quality stamp and proof of that issues. But I mean, and I don't want to step aside or support the Repsol case where we weren't involved, but definitely it's our role to take care of the quality of and the credibility, which then falls back to us intermediaries as well. Obviously, that to me goes without saying. But with all the point I wanted to make is that with the EU action plan at the horizon, I'm not so pessimistic about the polluters and whatever else to come to the market. Finally, we all need to go, the entire industry, including our borrowers, be it via loan, particularly via loan, or in the securities market. We need to adjust very quickly to what is needed and wanted by the politicians, which we cannot avoid anymore. And that requires all of us bankers in particular, to ask questions to the borrowers which we haven't asked in the past on as regards to their sustainability strategy, as regards to their carbon footprint, and so on and so forth. And therefore I'm optimistic that even the huge number of SMEs or larger corporates which yet have avoided that market will be forced to be more transparent and more clear on where they are spending the money on brown activities or on green activities.
Okay, Ulf, and then I want to ask Rebecca a question.
I think the perspective of the brown issuers is also what's making meetings like this one so incredibly important. What we're seeing in markets today is essentially an evolution where dirty issuers or dirty companies are divesting from those activities in terms of their public equity exposure, because institutional investors on the equity side are very sort of vociferous around that. Now, what happens then? They don't cease to exist. They actually go and become financed through the fixed income markets, through the bond markets. So bond markets totally are roughly $100 trillion US, whereas equity markets are roughly $60 trillion US. And then we see the green bond market of $400 billion. What we're discussing here in terms of the green is such a minuscule part of the total financing market, and it's extremely important that we actually try to block some of the brown issuance that goes from public equities into fixed income and start working on that side, rather than just splitting hairs in terms of what's green and what's not as green as the first thing.
Okay. I think you're giving a sort of call to action to a more engaged bondholder across the fixed income, not just on the green bonds. Rebecca, I'd like to ask you a question. This is a completely different topic. There are two ways of doing a green bond as an issuer, right? You can have say, right, this is a stack of green activities I'm doing. It's 10 billion. I'm only going to issue like up to a maximum of 8 billion of green bonds. Therefore, the green bonds are always covered by the eligible activities, and investors should be happy with that. The other approach is you earmark specific assets to specific bonds. Now, this is more work for the issuer, but it enables you to say to the investor, in a particular bond, this is the impact of your bond. So I'd like to hear, Rebecca, what you think are the pros and cons of those approaches, and which way the market is tending.
Sure, I'll talk a little about our own experience with green bond reporting. We now have 6 either SDG or green bonds or structured notes in issue, so it's quite a number. And to the point around reporting, each of those has an individual report right now. There's time and administration involved in that, it has a full audit, etc., etc. Also with the assets which underline, there's work involved, number one, in identifying those assets, because traditional accounting regulatory systems just don't work. There's no flag, there's no system that tells you. And secondly, from an impact point of view, it's quite simple if that's project finance, but as soon as you start to look at projects which are in the supply chain, it gets a lot more complicated, and typically they're much, much smaller in size also. And that's where HSBC's projects usually are in the supply chain of large corporates, rather than project finance. So I do think there's even more questions when you get into the social realm, and examples with water, where we're asking our customers' data, for our customers' data in order to complete impact reporting. Same with health and education. Even our customers might not have that data in order that we can complete the impact reporting. So there's all sorts of administration and work involved in that. I think that there is a way perhaps of completing some sort of impact reporting associated with one bond, so investors can see the impact an individual bond has, but not having everything separate. So perhaps it's just one set of annual reporting per year. It goes on the website, the qualitative gets split from the quantitative. Maybe it's even an Excel spreadsheet, I don't know. But again, that would be a question I'd throw back to the investors, because I'm really keen to scale this market. And I think in order to do that, we need to think about these efficiency points.
Okay, thank you. I want to ask Otto about that as well, and then we'll go to the investors.
Yeah, I mean, we have the approach that we actually have a portfolio, and the reason is pretty simple. We have a loan program on renewable energies, which is defined, which was already defined before we started to issue green bonds. And these are thousands of small individual loans. So every one of you can apply for one of these loans actually on the renewable energy program if you want to build solar panels on your rooftops. So I think no one is really interested, no investors, to have information about 10,000 individual loans. And even if we wanted to, there's a bank secret. We are not allowed to give detailed information about all these individual loans. Therefore, we took the approach of the portfolio level. We engaged some external research institutes, ZSW, to calculate the impact, and also able to provide an impact reporting. I would actually rather ask the investors, well, if they have any kind of difficulties with these two different kind of approaches, it would be interesting, but give a little bit of freedom to the issuers actually. They have different kind of DNA, different business models, yeah, so therefore we actually do it on the portfolio level.
Thank you. Bram, you want to take that?
Yes, maybe, from our point of view, when we started our Green Bond Fund 2.5 years ago, we had maybe 40 lines in the portfolio. So everything was very, the oversight was quite easy. Market has grown significant, we have now, I think, 120 lines in the portfolio. I really strongly encourage issuers to report on the portfolio level as well. For us, it is a lot of work to go really line by line through the portfolio. It's just much more work, and the more the market grows and matures and diversifies, the more challenging it will become. And whenever I have meetings with issuers, I had a couple of them, organized by ABN AMRO this morning as well. My message is always also to issuers, make it a short and simple impact report. Don't start publishing 30, 40, 50 pages because it's just going to be a big load for the investors to go through. Not impossible, but the load is really getting too much probably.
Okay, thank you. Ulf, do you want?
Yeah, and I mean, parsimony in reporting, I'm sort of a quantitative angle, but I think even more for us as a hedge fund where we use leverage, where we use the long-short dimension, it becomes very important to be able to measure things like carbon intensity across the whole portfolio. If I go short an Exxon bond at the 30-year maturity, how much do I need to buy of the NL green bond to have the same effect for that? Because it comes down to sort of some sort of effect of cost of capital in terms of green versus brown issuance, etc. But we appreciate all the data efforts, and we know there's no standard, but hopefully we come to something where we can compare not only the 400 billion, but also the 100 trillion compared to the green bond market, and that will make us feel even better about buying the green bonds.
How would you see then more, and now what we see is more impact, for example, in CO2? Would you not prefer then to see an outcome-based reporting? So the kilowatt hours of energy saved, or because then you can use it at least with your own parameters and make your own calculations.
It's hard to get those numbers from Exxon, right? Whereas I understand how much the CO2 contribution is from what they're doing. So it's when we get in some sort of apples for apples measure, it makes it much more simple to take the long-short dimension of things.
Yeah, even there is a huge diversification in terms of investors' appetite or willingness, as there is a huge diversification in terms of issuers, for sure. This is the reason why, I mean, certain investors ask us to report project by project, line by line. Another one that, for the sake of, let's say, being quick or much more effective, asked us something else. To the same extent, I remember the first roadshow in which there were three main investors, very green, that were started to question about our legacy of 10% of nuclear production. And after some months, I have seen the issuance of the green bond of EDF, our friend of EDF. And I stop here, because they're friends. So, that they have 80% of generation coming from nuclear. So there is still a lot of diversification by which we should try to, as I said before, interact with investors.
Don't go too hard towards the dark green investors who are only dedicated to green bonds, because those guys are pretty, and ladies are pretty obnoxious when it comes to some of the green KPIs and so on. I mean, you should have the decent conversations with more mainstream managers, and they will make it actually simpler to issue the green bond, because you understand you don't need to go through all the nooks and crannies that you have to do when you're talking to the greenest of all guys, because they make it too complicated. It's their business model to make it complicated. That's where their edge is. And you need to realize that you should speak to a broader audience in terms of getting your green bonds out.
As we were saying before, we need to have more interaction with investors and to communicate with them, because this is the only way for us to try to make a benchmarking and to try to get the best from the financial community, because there is no any single rule that is valid for everybody.
Okay, thank you. We've got a slight moment. I'm going to ask the audience if anyone has a question or would like to make a point. Two speakers. We'll take Florence again, and then I see Chris Wigley at the back.
It's just a wish. I don't remember your name. Is it?
My name.
No, you.
Bram.
Please, whenever you say brown bond, I got a shock, like an electric shock. Because you cannot imagine when you are a corporate, you go to your board, and you say, hey guys, we're gonna issue brown bonds. And they say, why not green? Why not social? Because the vast majority of what we are doing, and you were referring to refinancing a big acquisition, typically, it's part of the story of. So can't we have also the blue ones somewhere? So not only brown, green, but blue, the neutral one.
Regular.
Regular.
Well, maybe we should call them colorless.
Thank you for that.
Okay, let's have Chris Wigley's.
Thank you very much. So my question is for Bram, for what he said earlier, and maybe to Ulf as well, and that is, would you invest in a green bond issued by a tobacco company?
No, no.
Okay, so the question was, would you invest in a green bond issued by a tobacco company?
No. I think, you know, for us, tobacco is excluded from everything we do at NNIP and NN Group, so the answer is no.
We'd be very careful about doing that. I wouldn't say we don't have it as a strict exclusion, but we would be wary about it. Yeah.
And Chris, I suspect I'm going to ask you to just shout now, but I suspect you're driving at something, aren't you? You're not just interested in what are you driving at?
Given what Bram was saying earlier about inviting the biggest polluters to come to the
Right.
I think we have to show some discrimination here. And one of the things to evaluate is really whether the positive impact of green bond can outweigh the negative impact in terms of social of, say, for example, a tobacco company. These things have to be evaluated together.
Okay, thank you.
Yeah, that's a little bit one, you know, we're slightly competitors, I'll say, but it's one of those where we can make it too complicated, right? I mean, can we have a green bond by a tobacco company? At the same time, people are lending money left, right, and center to some of the worst polluters on this planet. People are buying Australian government bond despite having a government there which is hell-bent on actually destroying the climate. So there's so much to do in terms of exclusion that is not touching the green space before we should even have this discussion with, you know, this is not green or this is not as green. That's my personal opinion, at least.
If you want to put it in the green area, then the question, obviously, if these companies, and maybe not this specific example, if they improve their energy efficiency by 30%, while still have some kind of social issues in the sector, would you still buy it in your green fund or in your ESG fund?
We have a prioritization when we look at the SDGs. We look at the pyramid where the biosphere is in the bottom, the climate targets are there, because we don't believe that some of the social goals that you're having in the SDG priorities, they are subsequent to actually reaching the climate targets. If we go into a 3 to 4 degree world, we're going to see issues that are going to dwarf anything we're trying to combat with social bonds today, for example.
Okay, thank you. I've got a question for the audience now. So if you could turn to your apps, and the question concerns, this is another change of subject, okay? We haven't talked about this yet, well, there you are, already answering. Should green bonds receive some kind of financial subsidy or advantage from public authorities? That could be tax, bank capital advantage, insurance regulation advantage, or anything. Okay. All right. Now that's interesting. Less than half think they should. Now, Arnold, do you want to respond to that?
Yeah, I mean, my maybe naive view on the current debate with politicians or coming from policies, if we want to change the society, which it is all about ultimately, and avoiding the 3 to 4%, 4 degrees increase in which will cause social problems around the world, then obviously something can be done by the authorities and the governments. And my idea, in Germany we have a 25% flat tax rate for retail investors on dividends and interest we receive. Why couldn't you differentiate if we have a clear standardization on what is supposed to be a sustainable bond or an investment, that that those assets might face a 10% tax rate only, and maybe non-green, normal blue, or whatever they might be called, bonds might face a 35% or 40% tax rate. So by that you will kick off something in the minds of the vast majority of people, and that might change ultimately our behavior and change the society more than just us specialized financial experts discussing how we can optimize the dialogue in between the various parts of our production chain, my view.
Okay, thank you.
I think there is a problem with that. So first of all, my intention would be if subsidies actually do it directly with the green assets, not through the green bonds. And the second one is, I think if we have subsidies, the regulation would be increased quite significantly. The government level will actually define very much on what they are paying subsidies. We are in a field of forward-looking market. I don't know the complete impact about the loans we have given out right now at this stage. We are as transparent as possible. However, if it turns out, I will see only in the future. So there are a lot of difficulties actually with that, and a lot of regulatory and problems with that.
Yeah, okay, thank you.
If we want to try to help the planet and really to go with the goal of decarbonization, I guess that it's much better if we concentrate ourselves not in incentive, but in a general framework between all the countries in Europe that would allow the substitution of the conventional generation of electricity, for example, with the renewable one. So I'm not speaking of financial incentive, because otherwise we have seen that has created a lot of mess and became a financial investment in Spain, and Italy has created a mess. So we have to try to create a general framework by which there would be disinvestment, to the extent that a lot of companies, like we have done, for example, start to shut down conventional generation power plant. And we are missing a general framework. In Europe, it's not even possible to make a long-term PPA, by which you have the uncertainty to install a renewable power plant. You have the uncertainty of the price, by which with the volatility of the price, you are gambling against the economic return of your investment. So I would concentrate first probably in creating, in pushing the people, the European community, to create a general framework by which we're going to have plenty of investment as an underlying. Immediately afterwards, we will have the underlying to propose to those gentlemen to invest on.
Okay, thank you. We're really coming to where we need to stop. So I'm going to just ask each speaker. You've got 30 seconds each. I'll start with Bram and we'll go round. And if you could just say if there's one thing you would like to see happen in this market that would help it and make it better.
Yeah, I think I'm repeating myself probably, but and this is what I just said in one of the earlier discussions. I think we really should try to have the sectors which are not visible, and think it's more difficult to issue bonds. We investors, issuers, and banks should work together to get that sector also into the green bond market.
Thank you.
Coal is the first battleground when it comes to climate change. What you need to do, you need to disinvest from different type of coal assets, coal activities, etc., etc. 85 to 90% of all known coal reserves must not be incinerated if we are going to reach the climate targets. Otherwise, it's game over and everything else we do is futile.
No, I think my key message is to all the issuers in the audience, don't wait with thinking about green bonds, but start doing it, start looking in your own balance sheet. I think the investors have indicated they are flexible, they want to discuss it, working together with other parties in the market, with regulators, but also with certifiers and people who make standards to come up with solutions, especially for the big group who is not doing anything.
From my perspective, more issuers which are open for looking into their portfolios and separating green activities from non-green activities. And finally, also politicians leading by example. If I look at German public pension funds, they might, if they demand something from us as the industry, they might lead by example by restricting themselves to green investments only. So, just an idea.
Thank you.
Please harmonise and link reporting frameworks. I have to talk through a range of numerous acronyms to colleagues, investors and customers before I even get to a point where we're talking about the action we're taking. So please harmonise and link.
On that side, a better classification of the market participant. So we should have to put a little bit more clarity on this market, who is doing what is this grade of green, what is the strategy, and on the investor side, who are the green one or the sustainable one.
So I think we can be glad on where we are at this stage. We have had a lot of debates and discussions and work, for instance, in various kind of working groups. Yeah, the green bond market is very lively, and I would encourage only everyone to continue that work and keep the product probably as simple as possible and not too overcomplicated.
Okay, thank you. I'm sure you agree that was a fascinating discussion. I'm delighted with how it's gone. You've all put up with a difficult format and standing up and all the rest of it, but produced some really tremendously interesting ideas. So please join me in thanking this excellent panel. Now, it's the end of the content part of the conference. I would like to say thank you very much to our sponsors, the investment banks listed there who have made this possible and created this free resource for the market to discuss some challenging issues in a free and creative spirit, I think. So thank you very much to them. I'd like to thank you, the audience, have been tremendous. You are the sort of life and brains, in a way, of the event. We're very appreciative of you all coming and contributing your attention and your thoughts and your questions. And of course to our excellent speakers, the last half dozen of which are here today, here this afternoon. We will be going in a moment and have some drinks out there in the lobby. I hope you'll stay with us. We will there. Also, I'm afraid you won't get rid of me quite yet, because we're going to be having our awards ceremony, which is the annual Sustainable and Responsible Capital Markets Awards. And there are some very important achievements being commemorated there. Just to sum up very quickly, I'm going to do this very fast, but I think it's worth highlighting a few things from today. Plastic footprint, a new concept, I suspect, for several of us, certainly for me. Let's not forget that. It's real and it's very, very serious. I thought another thing that came out of Mandy Barker's presentation was imagination and engagement. This plastic has been there for years, let's face it. She went out there, she made it intelligible to people, she communicated it, basically. And that's a tremendous thing that has really moved on that issue. So let's remember, imagination and engagement, it makes a difference. The third thing is morality. I think it's we've heard strongly said in different words and from different voices, morality has a place in financial markets. That's been reaffirmed today. It's not just about protecting yourself from risk and maximizing your returns. What flows from that is impact. Everybody is now using this word more and more. We're going to have to define it a bit more carefully. We're going to have to really think, what is impact? What is adequate impact? How do we weigh impact against the other attributes of investment, i.e. risk and reward? Finally, information. Again and again, more information, calls for more information, but also, as Rebecca said, the danger of too much, or at least it being too dispersed in incompatible formats. This is a massive challenge for this market, and I think, you know, flowing from that is also, we mustn't use lack of information or lack of precise information as an excuse for inaction. Several of the investors, particularly today, I think have shown how much you can do, how active you can be, how proactive, even in the absence of perfect information. So I'll leave it there. Thank you all very much indeed, and let's go and have some drinks outside. Thank you.